Q1 financial year 27 was marked by highest ever quarterly revenue of rupees 1,198 crores, a year-on-year increase of 19%, along with the record milk procurement of around 21.1 lakh liters per day, supported by the revival in the milk supply. EBITDA for the quarter stood at rupees 65 crores, translating into an EBITDA margin of 5.4%, and PAT stood at rupees 41 crores. While milk availability has improved during the quarter, procurement prices did not come down as the focus was on building up the inventory for future requirements. Our strategy is in line with the overall industry trends. These elevated procurement prices were not fully passed on to the consumers, resulting in continued near-term pressure on our profitability. With this in view, we will be able to pass on the increase in price to our consumers in the forthcoming quarters. This said, the year-on-year decline in EBITDA and PAT is largely cyclical, driven by the input cost squeeze, and we expect gradual recovery from Q2 onwards. Our procurement network also continued to strengthen during the quarter. Procurement in Maharashtra and Karnataka improved, and we continue to add more farmers to our network. Coming to our value-added products portfolio, we recorded highest ever sales of rupees 415 crores, registering a 17.6% year-on-year growth, supported by prolonged summer seasons compared to the earlier onset of monsoons in Q1 FY26. We see a strong demand across our summer-oriented products such as curd, buttermilk, flavored milk, ice cream, and other value-added products. Notably, the highest ever number is achieved without any support from bulk sales for SMP or butter, reflecting our continuous efforts and dedication of our team towards a VAP product mix aspiration. On a like-to-like basis, excluding the bulk sales proportion, VAP delivered a solid growth of 40.6% year-on-year. Africa business delivered another strong quarter, recording the highest ever revenues of 154 crores, representing a solid growth of 45.6% year-on-year. EBITDA also touched a record of rupees 24 crores, increasing 74% year-on-year. We continue to maintain our market share of approximately 50% in Uganda long life milk category and yogurt. In Kenya, our processing capacity continues to ramp up towards full utilization, while our current market shares remain modest at around 2 to 3%. Our organ feed segment continued to complement our core dairy operations during the quarter. Beyond its financial contribution, this also plays an important strategic role in strengthening our procurement ecosystem and maintaining good relations with farmers, enabling us to manage the industry-wide challenges such as periods of low milk availability. Coming to our Osam business, the integration continues to progress well following the acquisition. Revenues for the quarter stood at 91 crores, and we are gradually seeing improvement in our profitability. We continue to focus on improving operational efficiencies across sourcing and costs while strengthening our presence in Eastern Africa with driving long-term growth in this business. Now, speaking on our expansion initiatives, our Maharashtra Greenfield project is progressing as per the plan, and timelines for commercial operations remain intact. As part of our Eastern India expansion strategy, we continue to evaluate the optimal utilization of a Chandil plant, including the possibility of shifting flavored milk production at this plant to effectively serve the Bihar and Jharkhand markets. Following our due diligence on land allotted by BIADA, we are revisiting our strategy for capital allocation either towards the land or towards more capacity at the Chandil facility. We aim to strengthen our presence in a more capital-effective manner. I would like to inform you that the Board of Directors has approved a primary investment of rupees 11.65 crores for around 2% stake in Sid Farm Private Limited. Sid Farm is a premium dairy brand with a strong multi-regional direct-to-consumer and e-commerce presence. The investment aligns our core dairy business and provides exposure to the fast-growing premium and direct-to-consumer dairy segment. It also offers us an opportunity to associate with and support the growing for differentiated high-quality dairy brand. With this brief, I now hand it over to CEO of our company, Mr. B.V.K. Reddy. Thank you very much.
Thank you, Mr. Sunil Reddy. So now I will walk through you the quarter performance highlights of our business. Starting with our Dodla Dairy operation, During the quarter, as anticipated, the overall milk supply situation started improving, and we see some increase in our milk procurement volumes. Recorded at 21.1 lakh liters per day, which is 13% year-on-year growth. It reflects the strength of our operational team, direct procurement model, and long-standing farmer relationship. The average procurement cost Q1 FY27 stood rupees 41.3 per liter as against 41 rupees per liter in the previous quarter, and 37.4 per liter in the Q1 of FY26. However, we continued with our approach of gradually passing on the price to the consumers and avoided taking a lump sum price hike. Our average milk sales price for the quarter stood at rupees 59.4 per liter, which was 58.4 per liter in the previous quarter, and 57.2 per liter in Q1 FY26. Therefore, our margin continues to remain under pressure for the quarter. To put the squeeze in context, the spread between our milk realization of rupees 59.4 and the procurement cost of rupees 41.3 is 18.1 per liter from 19.8 a year ago, which largely explains the EBITDA margin decline from 8.2 to 5.4%. In addition to that, we witnessed some increase our operational cost, mainly due to input cost inflation and shift in product mix from bulk sales to milk and VAP sales. We see an increase in costs like transportation, overheads, fuel, and packing. The packing material cost increased by 48% during the quarter, rising 5.6% of our revenue as against 4.4% in the period of last year. We plan to pass on some part of this cost inflation to the end consumer in a gradual manner. Our pricing strategy remains in line with the overall industry trend and reflects a balanced approach. Our subsidiary, Osam Dairy, is also progressing well. We see a healthy contribution from the company in terms of our curd and sales volume. With consistent and gradual improvement in operational efficiencies, Osam is headed towards our targeted scale and margin profile. Coming to Africa business, it delivered a strong revenue growth of 45.6% on year-on-year, largely driven by robust milk sales growth, 52.3% on year-on-year. This is an outcome of our targeted efforts on gaining market share in Kenya by strategically pricing our products. Along with revenue growth, our profitability also improving steadily. We are confident in achieving robust and consistent revenue growth along with steady margin improvement in this business. So coming to feed, Arga Feed recorded revenue growth of 25.9% on year-on-year. Raw material price growth is still faster than the selling price, leading to continued pressure on the profitability. However, as anticipated, we see a sequential recovery in our profitability, our EBITDA margin for Q1 27 with marginal sequential improvements to 10.5%. Coming to product mix, our milk sales stood 13.6 lakh liters per day, an increase of 14.5% on year-on-year. During the quarter, we delivered highest ever VAP sales number, rupees 414.7 crores as against rupees 352.8 crores in Q1 FY26. This was mainly due to a seasonal variation explained by our MD as well as improved contribution from our Osam business. Curd and curd-based products reported a healthy growth of 41.4% on year-on-year and stood at 642.6 million metric tons per day in terms of value. And curd sales grew by 44.9% on year-on-year basis. Going ahead, we expect some modernization in the procurement cost from Q2 onwards, leading to start a gradual recovery in the margin profile for upcoming quarters. We are confident to mitigate this near-term pricing pressure and remain focused on effective execution and achieving our long-term objectives while delivering profitability growth. Now, I request Mr. Murali Mohan Rose, our CFO, to highlight the financial quarters.
Thank you, Mr. B.V.K. Reddy, and a very good morning to all the participants on the call. Talking about consolidated financial performance in Q1 FY27, revenue from operations stood at 1,198 crore, the highest ever quarterly revenue, registering a 19% year-on-year growth. Gross profit for the quarter stood at 278 crore with a gross margin of 23.2% as against 25.8% in Q1 FY26. Employee expenses for Q1 FY27 stood at 56 crores compared to 47 crores in the corresponding quarter last year. The 18% year-on-year increase was primarily due to OSAM addition during this quarter and higher employee costs pertaining to the minimum wage criteria as per new labor laws. Other expenses for the quarter were 159 crore compared to 130 crore in the corresponding quarter last year. While other expenses remained broadly in line with revenue as a percentage of sale, the increase in absolute terms was primarily driven by higher transport, overhead, and fuel costs due to the shift in product mix from bulk sales to liquid milk and value-added products. EBITDA for the quarter stood at 65 crore with an EBITDA margin of 5.4%. Depreciation expense increased to 23 crore in Q1 FY27 from 18 crore in the corresponding quarter last year. Other income for the quarter stood at 14 crores. Unlike previous few quarters, we don't have any tax credits in Q1 FY27 related to any of the favorable income tax orders. Net profit for the quarter stood at 41 crore with a net profit margin of 3.4%. On the balance sheet, we remain net debt free with approximately 689 crore of cash and investment, which comfortably funds our 590 crore capex program along with the OSAM and Africa expansion without any leverage. Lastly, I would like to mention profitability includes purchase price allocation effects, brand amortization, and fair value adjustments. Hence, its underlying profitability runs ahead of the reported figure mentioned in our investor presentation. With this, we conclude the presentation and open the floor for further discussion.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Praveen Kumar with Acuitas Capital Advisors. Please go ahead.
Yes, hello. Thanks for the opportunity. I had a couple of questions. The first one was on the margin trajectory. Can you walk us through how do you expect the margins to behave from here onwards over the next 6 to 9 months and then also over the next 2 to 3 years? Can you walk us through what are the triggers, what are the near-term and the mid-term triggers for improving these margins? Or do you given what has happened on the procurement side and on the pricing side, do you think that margins have structurally reset downwards to some extent? That is the first question. The second question was on allocation part farms. Just want to understand thought process behind that. Why that 2%? Why that very minor kind of mistake? What is the thought process behind that? Third question was on growth. If I look at the
I'm sorry to interrupt, Praveen. You're breaking up every now and then. Could you please change your location and use your phone on the handset mode in case if it's not on handset?
Yeah, it is on handset. Is it better now?
Yes.
Yeah.
Please go ahead.
Yeah. So the third question was on the procurement growth adjusted for OSAM. That seems, on a YOY basis, that seems to have grown around 5.3%. So I just wanted to understand again that most of it has probably come from that Maharashtra scale-up. So does it mean that ex of Maharashtra, the other geographies, there hasn't been much of a procurement growth? Yeah. Those are my three questions. Thank you.
Yeah. So thanks a lot, Praveen. I'll answer the first two questions, and the third question regarding procurement growth in OSAM and Maharashtra, BVK will answer. Margin trajectory, if you look at it, we are still confident that we will maintain between the 7 and 8% EBITDA margins even in the current year that we are at. Because like we were saying earlier, we were assuming that with the onset of monsoons, the procurement prices will taper down. But now seeming to be that there's not much of an increase in procurement in terms of the flux that we normally expect. We will have to slowly pass on the prices to the consumers, which we have already started in the process. With that in view, the margins will start coming back to those between the 7 and 8%, subject to whatever is the 1 month of time that it consumes to pass on the prices. In the 2 to 3 year scenario that we asked, we are confident of maintaining similar profit margins as we go forward, predominantly because of when we look at it, we are adding on Maharashtra, there is improvement expected from OSAM. These are mostly seasonal corrections and not structural in nature. Therefore, we are very confident in the 2 to 3 years to come. Therefore, it is not a reset of the margins, but more a seasonal correction that has been happening. That is the scenario. Now, coming to the capital allocations to Sitfarm on a minor stake, it is basically for us more in terms of learning and keeping a closer watch on how the modern high-value D2C products behave. Because, for example, we believe that for a consumption pattern to become a habit from a fad, it will take significantly long time. And therefore, to test the thesis and such other theses that we have, we normally try to go, we are learning it with another rather than trying to create on our own. And if it is showing good trajectory and possibility, we will also know beforehand as to how it is progressing. So that is the intention of the capital farm. Regarding procurement growth, BVK sir will explain what is happening in Bihar, and it's not only Maharashtra, but also I think we have grown in Karnataka as well. But BVK will explain Bihar and other growth in procurement.
Yeah, in Assam, if you see last year, procurement last year, we don't have right data because they used to use a lot of powder and butter. Now we know that we are avoiding that powder and butter, and now first quarter, more or less, we matched our sales to procurement. So there is a slight growth, not much growth, because, we have done a lot of corrections more than the procurement, we are going for farmer, payment model. That's why, things are going very slow. But in Maharashtra, we have done a procurement growth. So last year to this year, Maharashtra, we have done a growth of, overall growth, we have done 13%. We have done a growth of 10% in Maharashtra also. And then Africa, we have done roughly about 28% procurement growth in only procurement growth. That's all from the procurement side.
So actually, my question on procurement was that if I take out OSAM, adjusted for OSAM, the remaining unit procurement grew 5.3%, right? And when you are saying that Maharashtra grew around 10% and Africa grew 20+%.
No, right? Maharashtra is a part of EDL overall, but overall we have grown by 13.5%.
No, I understand that.
Some almost it is flat, but Africa and India together we have grown more than 13%.
No, I understand that.
India we have grown only 3%.
Yes, standalone only 3%, Praveen.
No, I understand that. I'm saying that ex-OSAM, last year Q1 FY26 did not have OSAM, right? Then your procurement was around 18.7, correct? Around, right?
Yeah.
And this year, if I take out...
I'll tell you the breakups, Praveen. Just give a minute. So out of 18.71, the current year we have done 21.13. The breakup is for Dodla Dairy India, 16.75, now increased to 17.23. That is 3% of growth. Then overseas from 1.96 to 2.52, that is 28.5% of growth. For HR foods, last year we don't have it. Now we have 1.39 LPD. So the overall growth comes to 13%.
No, I understand that. I'm saying if from the 21.1, if I take out OSAM 1.39,
1.39 minus
around 19.7, correct?
Exactly.
Right. So that 19.7, I'm comparing it to the last year 18.7. Right. I'm saying
Yes.
that is a growth of 5.3%, which has mostly
Exactly.
come from Maharashtra and Africa, looks like. Right. So my question
Mostly
was
from Africa, followed by Maharashtra. Yeah.
Yes. Hence my question was that does it mean that the other geographies like Karnataka, Andhra and others have they degrown during this time in terms of procurement?
It's not degrown, it's maintained the same because it's again the summer months of the growth.
Okay. And do you expect this kind of a trend to continue where you don't expect much of a growth from the existing geographies and largely Africa, Maharashtra and Bihar is what will drive?
So basically what happens is also what we play with pricing, because sometimes if the pricing of the particular states in comparison with other states are lower or higher, we try to manage as a blend of all the states' procurement. For example, Andhra is becoming more competitive and the prices are going higher. There we are not expanding capacities or improving and waiting to see if it can be where the pricing is going too high. And in certain areas where the pricing is more conducive to us because of our transport and being closer to the places where we operate, we enhance there. So it's a blend of what we do also that plays into the role.
Understood. Thanks for the response.
Thank you. Participants, in the interest of time and fairness to others, please restrict yourselves to 2 questions. For any more questions, you may rejoin the queue. The next question comes from the line of Anirudh Joshi with ICICI Securities. Please go ahead.
Yeah. Thanks for the opportunity. And sir, 2 questions. So can we largely assume that the worst in terms of margins is largely behind, and in a way from here on either there should be stability or there should be a recovery depending on the milk procurement prices? Also, have we largely passed on the entire increase in procurement prices as well as fuel prices increase via selling price hikes, or still we need to take some rounds of further price hikes? And then second question, on the balance sheet, we have seen there is a drastic increase in goodwill and intangibles of almost 250 odd crores. So I guess it's related to OSAM acquisition. So any plans for writing it off? And if it is written off, is there any tax benefit available on that? Yeah, thanks.
So the first question, BVK will answer regarding our margin profile, what you had asked for, and I think the balance sheet, Murli will answer it. Yes, sir. Go ahead.
Yes, Anirudh. Africa, we have done, whatever procurement hike, was there, we compensated with the sales increase also. That is number one. And Argo also what we have done, slightly, already 70-80%, raw material price increase versus, sales price correction, we have already done it. Only in Dodla DDL also, we waited till, July first week, because normally, from July onwards, procurement goes up. Normally prices, will come down. So this year, it has not happened. That's why now we have already done corrections, mostly from 15th onwards. And most of the corrections are done. We are very confident that we'll get back to the same old last year, like 7 to 8% margin profile.
Yes. With regard to the tangible, so basically like OSAM, we have 100 crores of goodwill is there. Apart from that, around 150 crores of branding is there. So based on that, we have an allocation, impairment of whatever it is there. But it is a standard fair value of amortization. There is no any surprises of reduction in the fair value. 100.
So therefore, we will not be providing anything for write-offs in the impairment of assets. And like BVK was saying, we expect that the worst is behind us in terms of the procurement prices coming to a stability. I don't think they'll further increase dramatically. Marginal corrections might happen, but we will have to take it in the correction to the consumers.
Okay, sure, sir. Sure, sir. This is very helpful. Just last question from my side. We have seen many players, especially in South India, are focusing very aggressively on ice cream segment and are setting up large plants also. Considering the investments and the growth in ice cream segment, there is a possibility that there is a solid growth in the industry. So, what will be Dodla Dairy's stance on, in a way, participating in the growth possibility for ice cream as an industry? And if yes, what will be the capex or the investment plans on that? Yeah, that's it from my side. Many thanks.
Thank you, Amit. Right now, we don't have any plans of a major ice cream expansion as a capital expansion. We have also seen reasonably good traction in our ice cream volumes, which thankfully due to summer have done very well for us. I think we still have some leftover capacities because we can also produce ice cream previously during the season to stock for selling during the peak summer seasons. So we are waiting to see how it pans out for us in the current year, and maybe such decisions will be made not currently, but hopefully in the future. So our growth has been from 16 crores to 22 crores in the first quarter itself. So we think, once we see this year panning out, and then we'll make plans. Currently, we do not have any plans for major expansion.
Thank you. The next question comes from the line of Darshita Shah with DSP Asset Managers. Please go ahead.
Thank you for the opportunity. My first question was regarding the quantum of the price hikes. PVK sir mentioned we have done some corrections from July 15th onwards. If you could just mention the quantum over the 2 rupees price hike we took last quarter, how much incremental price hike we have taken now?
So I think from the Q1 to Q1, if you compare the price increases, we have done an average price increase in Dodla of almost 2% increase in the consolidated, Dodla being around 1.4% and Africa being around 4%. I think currently we will look at another around 2%, 2.5% correction in the prices in the ongoing quarters that we look at. So effectively, I think current year we should look at a 4-5%.
The 2.2% is in standalone Dodla or Africa and Dodla put together?
The total represents all put together. Dodla alone was around 1.4% currently, but we think we will take another 2.5% there.
Rashad, this is only milk realization price we are talking. We are not the blended.
Yes. Okay. And secondly...
blended will be higher because ghee and other products we have taken a substantially larger price increase. This is only milk.
Got it. Clear. And secondly, on the volumes, how do you expect the volume growth to be for the year? First quarter, of course, we have done quite well, but how do you expect it to be for the full year, considering the price hikes that we are taking in?
Maintain our normal steady things of that 8 to 10% in India as volume growth, and the price hikes will add to the value growth. So that's what we look at.
Okay. So there is no change on the 8 to 10% volume growth number despite the price hikes?
Yeah.
Got it. Okay, great. Yeah, that's all from my side. Thank you.
The next question comes from the line of Yash Goenka with Auriga Capital Advisors LLP. Please go ahead.
Hi, sir. Am I audible?
Yes, Yash, go ahead, please.
Hi. So my question is on pricing. What are the price hikes taken by cooperatives in the region we are operating? And have you seen cooperatives taking price hikes in Tamil Nadu?
Price hikes in Tamil Nadu cooperative, Amul has taken a price hike in the ghee, Nandini has taken price hikes in ghee, and the national cooperatives had taken a price hike earlier in milk. We anticipate also they will also be forced to take price hikes, if not currently, in a matter of time. So we are, in spite of that, we are continuing with our the price hikes that we will have to take. Even we do not know when, but I'm sure they will have to take because the differential is becoming large, and we are seeing pressure coming on the ground in terms of their payments to be made to their back-end farmers, and it's getting delayed there.
Right. Okay. And so what is your price gap today with these cooperatives?
Almost averaging, because depending on product or whatever, I think between Tamil Nadu will be the highest with almost more than a 10 rupee price gap, and in Karnataka it might be 6-7 rupees price gap. So those are the only two areas where we have a significantly large price gap to the cooperatives.
Okay, and so my second question would be, What kind of price hikes have you taken in the regions where your market share is stronger compared to the ones where your market share is weaker?
So basically, in terms of absolute number, it will be around the 2 rupee price increases that we have taken as a correction across.
Thank you. The next question comes from the line of Abhishek Mathur with Systematic Groups. Please go ahead.
Yes, hi, sir. Thank you for the opportunity. Sir, you've mentioned in the presentation that you expect the 2Q milk procurement cost to normalize in the second quarter. What is leading you to sort of expect this? Is it only the improvement in the milk supply in Maharashtra, or are there other drivers due to which you are seeing a normalization of milk procurement cost? Also, if you can help with what was the average procurement cost that you saw in the June month, and what is the procurement cost that you saw in the July month also? That's my first question.
Thank you. So basically what we mean by normalization is whatever the price hikes that are taken will maintain the same. We won't see a decline in the procurement prices, what the normalization means. I think with specific numbers in terms of what the price of milk, they were almost the same in terms of June and July. I think if you want the specific number of prices that we were...
Basically the average is around 41 rupees. Now also it is running around 41.20, more or less.
See, last 2 months, in the month of May, June, July, the overall procurement cost is standstill. So it is, in the same level. Only we have done the sales correction average 2 rupees per liter milk, and VAT we have done 3 to 4 rupees correction.
Got it, sir. That's helpful. Secondly, just a bookkeeping question. If you can help with the numbers for the consol overall realization for 1Q, the VAP consol realization, and the standalone and Africa realizations, all for 1Q, please.
Yeah.
Just 1 minute, Murli will give you those numbers of 1Q for the realization that we have.
So overall realization of the milk is basically per liter.
No, sir. Overall consol, including milk and VAP and everything.
Yeah. Overall consol is 62.78 last year. Current year it is 61.78. Okay, because the bulk was there in the last year. So if you exclude the bulk, last year it is 59.82. Current year it is 61.78.
And for VAP, sir, VAP consol?
VAP consol, it is basically excluding the fat, it is 64.11 for the current year. Last year, 61.32. VAP product 6.4 is current quarter. Last quarter it is only 498.
Right. And finally,
fat products, that's fat and burger.
So yeah, only butter and ghee.
And lastly, sir, for standalone and for Africa, what are the realizations?
I will give you the standalone. You see, Africa, even Kenya and Uganda, average realization 65 rupees. Comparison to last quarter.
So last quarter,
yeah, last quarter to this quarter, I'll give a comparison. So last year, if you see, Uganda, we were at 59.36, and this quarter, 65.31. And similarly, even in Kenya also, we were at 58, now 65.
Got it, sir. And finally, for standalone?
Standalone, sir, overall excluding the bulk product is 59.99 to 61.36 for the India standalone, and overall including fat products it is 59.90 to 60.88, and including the bulk it is 63.24 of last year to 60.88 of current year.
Thank you. The next question comes from the line of Darshit Vora with Asset Meta Institutional Equities. Please go ahead.
Yeah, hello. Am I audible?
Yes, Darshit.
Yeah. Thank you for the opportunity and congrats on the strong growth in revenues. My first question actually is that if we look at VAP sales X of bulk and curd, then the growth has been somewhat lower when compared to historical growth rates that we've seen. So any particular reason for that?
Basically, for us, the other VAPs considered to be very much smaller. Right? The major contribution does come from curd. So even if you see curd slightly increasing, it will be better. But I think I'll just check the numbers. But like ice cream and paneer, we have done much better in terms of growth, like 14 crores last quarter to 22 crores this quarter. I think maybe we'll explain the specific numbers in VAP minus curd is what we'll explain.
So in the milk, we have grown 14.47. In the curd and curd products, we have grown by 31.43. On the other VAP products, it's 35.62. And the fat and fat products, which we reduced it, there is a degrowth of 46%. Okay, in the consumers. And apart from that, we have exited completely from the bulk sale, which was negative. That is around 57 crores, which was there in the last quarter. We don't have done this.
So in curd, when we say curd and curd products, it's not only curd that we talk there, but we talk of our buttermilk, lassi, and other fermented products, which also do well for us.
All right, got it. Okay. And secondly, if you look at, you've done increased procurement and you have mentioned that the procurement is not going to slow down from here onwards. So do we see bulk sales coming back? And if yes, then what kind of a quantum are we looking at?
I think this year there won't be enough quantity of bulk sales. We will have to be net buyers of commodity if required, because this is supposedly the flush season where we should have seen a surge in volume growth of 20-25%, which is not happening, and maintaining more of an even keel. With that, I think we don't have much of bulk sales available for this year.
All right. Great. Just final question here. Just wanted the curd sales in INR terms for the quarter.
Curd sales in INR terms for India, including all the curd products, will be
333 crores.96 for the current quarter.
All right.
Last year it was only 2 curd.
Does that answer your question, Darshit?
Yes. Thank you so much.
The next question comes from the line of Resham Mehta with GreenEdge Wealth. Please go ahead.
Yes, sir. Thank you. Would you like to, the first quarter consolidated revenue growth has been, very good, right? So would you like to give some revenue guidance for the full financial year, consolidated revenue growth?
We will again target the 10% of volume growth and 15% of revenue growth that we keep targeting. We might have minor corrections here and there, but consolidated, we will give the same guidance of 10% of volume and 15% by revenue.
Right. And can you talk about your standalone VAP growth in terms of revenues for the last financial year, FY26 versus FY25, and also for the current quarter, which is Q1 of FY27 versus Q1 of FY26?
So you want the FY25 whole year comparison and the current quarter comparison, ma'am?
Yeah. Yes, correct.
Yeah, I think Murli will give you that in terms of the whole year and the current quarter. We'll start with the current quarter.
Current quarter, India, I'll talk about first. So current quarter growth with regard to the value, it is around 4.9% in the milk and 34% in the curd and curd products.
On the VAP revenues. Standalone VAP revenues, for the said time period,
So from 245 crores to 332 crores, including bulk.
Sorry,
332.
245 versus 332. Okay, so that's a 36% VAP growth in the standalone, right? Okay. Get it. And for FY26 versus FY25, broadly you have the growth numbers?
Yeah. So 769 crores of last year to current year 842 crores. These are excluding the give and better of the either consumer or the bulk. I'm talking about pure VAP. Fermented products. Consumer give, last year we had 81 crores. It is 106 crores.
Thank you. The next question comes from the line of Aditya with Securities Investment Management. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. Sir, if I look at your milk sales volumes, excluding Osram, so they have dropped to now around 5%, which we were growing at around 8-9% for the last 2-3 quarters. So this quarter, even after Africa has grown strongly, why is there a drop in milk sales volume? And if you could just split the milk sales volume between India and Africa, how much have they grown?
So normally milk sales does not increase much in summers because people use more of the products than the milk itself. And I think in the coming quarters the milk sales will grow a bit more and keep it as come back to the normal trends. And also as our price differences increase in terms of the milk prices, we normally try to sell more of our higher realization milk and don't push much of our lower realization milk products. I think giving a comparison of what milk was in terms of in absolute terms between Africa and India, Murali will give you the specifics in terms of the milk quantity of Africa and India.
Yeah, milk volume we done around 10.4 lakh current quarter. Last quarter it is 10.25. There is a minor increase in the milk, like Sir said that it is the fiscal year of the summer. And with regard to the milk of overseas Africa, last year we done 1,61,000 as against we done current quarter 2,14,000. That is around 33% of growth was there in the milk itself.
Understood. And also you had mentioned that cooperatives have taken price hikes in ghee and butter, but what about liquid milk? So what kind of price hikes have they taken versus against us?
So basically, I think the southern cooperatives have not taken a price hike. The national cooperatives like Amul and Mother Dairy have taken the price hike. We are anticipating that even the southern cooperative should take a price hike, like I said earlier in the earlier question. For example, Avan is facing pressure of not taking the price hike, therefore not being able to pay on the suppliers on time, and therefore they will be bound to increase the pressure, which is showing in terms of I think the newspaper articles I cannot confirm it, but certain the higher loss-making milk SKUs they were not supplying, and they've withdrawn certain higher loss-making SKUs from the market. So I think with those indicators, we should think that they will also be forced to take a price increase soon.
But do you think that would constrain us?
I'm sorry to interrupt, Aditya. I would request you to rejoin the queue. Thank you. The next question comes from the line of Ankit Shah with White Equity Investment Advisors. Please go ahead.
Thank you for taking my question, sir. Sir, for Africa, can you give the procurement volume split between Kenya and Uganda for Q1?
So only procurement volume, sir. DVK will give you the procurement volumes of Uganda and Kenya.
Procurement volume, in Uganda, is Q1 1,54,000 liters, as against 1,29,000 of previous year. And if you see, take Kenya, and Kenya also last year we have done procurement only Q1 now 96,000, 97,000 we have done, and last year we have done 66,000. There is a jump of 46% in Kenyan procurement growth. And Uganda we have done only procurement growth is a 19%. Majorly we have done good growth in Kenya.
And sir, what are the utilization levels here?
Kenya now we are almost utilizing 80% utilization in Kenya, because we have the installed capacity is only 1.5 lakhs. Now we are already doing 1.1 lakhs. So hardly we have another 20%, 30% gap. But in Uganda, since because we are targeting yogurt there, we have grown yogurt also good quantity there, and that's why now we are planning for greenfield project. Uganda also is a full capacity actually.
Right. Sir, you mentioned realization increase from 58 to 65. So this realization is the blended realization 65 for Q1. And from this, should we see further margin improvement in Q2 as a fallout of this?
So I think the price that we have seen will be there, but as the seasonality comes in, procurement prices in Africa also increase in the second quarter. So it will not be a continuous amount of the same, but we will not lose profitability in depending on monsoon, will taper down and then again bounce back.
Thank you. The next question comes from the line of Sukrit Patil with Eyesight FinTrade. Please go ahead.
Good morning to the team. My first question to Mr. BVK Reddy is, beyond the regular outlook, what are the top 2-3 execution priorities you are focusing on in the next few quarters? And alongside that, what do you see as the biggest risk in consumer demand shifts or competitive pressure? And how are you preparing to manage them while still strengthening Dodla's position in the dairy products and value-added offerings? That's the first question. I will second question after this. Thank you.
See, if you see overall Dodla Africa, we have towards edge only. So maybe, normally, we do the better results in the first quarter and fourth quarter. Slightly, second and third quarter, slightly the margins. But whatever target, what we have taken a target budget, that we will 100% will achieve as far as Africa is concerned, volume as well as EBITDA. And feed also now we have done first quarter also more than 25% growth. And EBITDA levels also now slightly, there's a purchase price, raw material pressure is there. But even then, feed also we are very confident. Budget, numbers, both EBITDA and as well as, volume, both will achieve. And DDL India also now, we have done a lot of corrections. And milk we have done, earlier in the month of April, May itself, we have done 1 rupee, more than 1 rupee correction we have done. And then we have already taken 2 rupees correction. And, VAP we have done 3 to 4 rupees correction. So I don't see, there will be always a pressure because, I don't say there won't be any pressure. That clearly it is indicating that the impact, weather impact, because of that only is the issue. Or otherwise, things would have been better. See, there's no much of inventory, that's why there's a pressure, that's all. Otherwise, the price correction will be, yeah.
No, sorry. Please go ahead.
Yeah, that's what I said. Because of El Nino, because of the weather pattern, the procurement, and to see the anticipated level, it is not there. That's why there is a pressure, but we have already done a corrections.
Thank you. My second question to Mr. Murli is, from a financial point of view, what key risks or challenges do you anticipate in the coming quarters, and what specific measures are being taken to manage margins, cash flow, and balance sheet strength, especially in areas like raw milk procurement costs, receivables, and regulatory compliance? Thank you.
Yeah. So basically, it is more depends on how much you could able to pass it on the cost inflation to the consumer. It also depends on the planning of the inventory, the procurement, and the sales, and also how the other competitors are playing in the field. These are the things which we need to have a capture. Okay. Based on that, we will plan overall an absolute amount. We have to grow in the EBITDA percentage. That is one thing. And with regard to the cash flow, we are a debt-free company. We have around 650 crores in the balance, and we have to see where we get able to optimize the return on capital employed. That's where we are working towards. And now, as of now, we are funding internal accrual for the WOSO, for the Africa, and as well as for the Maharashtra. And we don't have any major issues in the accounts receivable. Basically, it is a cash and carry business. Okay. Our average DSO is around 1.5 days to 2 days. That's what we are doing. And payables, every 15 days we will pay to the farmers. And all the transport and other payments we will do it on a monthly basis. So we don't foresee any issues in the payables or the receivables. And the inventory, based on the movement of the prices increase or decrease and global situation, we play the inventory game.
Thank you.
Hope I covered all the things. Yeah.
The next question comes from the line of Hitendra Pradhan with Maximal Capital. Please go ahead.
Yeah, hi sir. Hope I'm audible, and thanks for giving all these details. I just had one question and wanted to get your perspective on the VAP portfolio, especially for curd and paneer. So, sir, what happens to the price?
You're breaking up, sir.
Hello, sir. Is it better now?
Not. Go ahead, sir.
Yeah.
Hello?
So just had one question on the VAP portfolio. So sir, what happens to the pricing and the working capital situation on the VAP portfolio in this environment when the procurement is somewhat stretched? I mean, in terms of pricing, in terms of margin and the working capital, if you can give us some color, what happens to the VAP portfolio? Thank you.
So you're breaking up a little bit, so I'll repeat the question before I give the answer. So one thing is you wanted to see what the VAP portfolio's impact based on the pricing of milk is going to be. And the second is regarding the inventory buildup that will happen in terms of the milk pricing. If that is the two the questions, I'll answer accordingly, sir.
Yes.
Basically, the VAP does not, the milk procurement prices and VAP transmission has already happened and it has been done. So whatever was the milk procurement price to the VAP realizations, we have passed on the pricing to the consumers, and that will continue to be there. But majority, as you know, VAP will have a higher offtake during season and will come down during the off-season. So I think during the off-season, as we go in and the procurement prices remain the same and VAP remains the same, the profitability in VAP will continue. Regarding inventory, we still have to wait and watch. I don't think we have insufficient inventory build-up happening for us on our own come for the next year. We might have to end up being a net buyer. It will not affect our working capital as such because we don't have any. We have our limits, but we don't draw on our limits because we have internal accruals to the tune of 600 crores also post our capital expansion. If required, we dip into our own reserves for our working capital requirement, and I don't think we will need much of working capital requirement because the same scenario of milk actually evening out and not surging high or low. I think in the coming days we might see that our own milk procurement, because we have built out our infrastructure also for a larger requirement for our new expansion that we are doing. I think we will not be having that much of an inventory build-up.
Okay. Thank you, sir. Thank you.
The next question comes from the line of Abhishek Kaneti with Nivaka Ventures Private Limited. Please go ahead.
Hello, can you hear me?
Yes, Abhishek.
Yeah, hi. Hi, sir. Thank you for the opportunity. Actually, I'm new to this company. So, I'm just trying to understand. So, if we take 3 years down the line, how would our portfolio look like, in terms of how would you see Africa, percentage of the revenue contribute to the revenue versus how would you think the VAP would change over the next 3 years? So these both. And also agro-feed.
So again, a little bit of breakup, Abhishek. I'm presuming you're saying how is the breakup going to be between the Africa revenue and India revenue in the next 2 to 3 years that you are anticipating?
Yes.
I think the Africa revenue will only contribute around 10%, and they will continue to be in the same trajectory of 10% in terms of maintaining it because the larger pie is the Indian operation. Even a little bit of growth in Indian operation, Africa has to grow substantially large to compensate the Indian growth pie to become more in that. But the 10% in comparison with India growth also means it's a reasonable growth in Africa. That is the reason we are expanding our capacities also in Africa as much as we are doing in India. I think we're growing in tandem with the capital allocation of the expected operational returns. It will be the same for the next 2 to 3 years unless we get some brand new opportunities or acquisitions which are not there on the horizon, but if something like that happens, it might change. Currently, we maintain the same scenario. So that is where it will be for us.
Sir, and in the Indian dairy business, how do you see the VAP moving?
Well, we normally target the same. Although the base is increasing, we look at it as a 10% of volume, and inflation in India has always been around 4 to 5%. That keeps adding. So to maintain this 10% by volume is what we have invested in Maharashtra, and we have taken over Osam as a larger scale expansion. So maybe 1 year or 2 years, we might drop to 7-8%, or some years you might go to 10-12% by volume. But 10% by volume is what we target for.
Yeah. So just to add,
thank you very much.
India will be around 70 to 80%, and overseas will be around 15%. Also will be around 8 to 10%. That is the dairy mix.
Thank you, sir. Thank you.
The next question comes from the line of Bhavesh Jain with DD Investment Advisors. Please go ahead.
Yeah, am I audible?
Yes, sir.
Yeah, so just wanted to ask, India's standalone business for the past 4-5 quarters has been on mid-single digit growth. So just wanted to understand and have your outlook on how do you expect growth from the core markets, and how much growth do you expect from the newer markets of, let's say, Bihar and Maharashtra?
So I think our core markets will try to be maintaining our market share more consistently, sir, because our core markets, like we explained, being, if you look at it from the Karnataka or Tamil Nadu side, the price differential between the cooperatives and us are already significant, and we don't want to keep pushing it further, and that is why we do more of geographical expansion. It is also proportionate with the correction measures that will be taken by the cooperatives. If the cooperatives do take a significant large price corrections that had happened in the previous years, we will also be able to get more market share there and continue with our market share increase. But currently it is because of the higher, we will not get a lot more entry into the HoReCa or the local shops because of the price differences. We will try to maintain our market share. Maharashtra will be predominantly a milk balancing procurement operation for us. We only have a 2 lakh liter kind of local market sales that we'll be looking at the local area. Similarly, I don't think Osam will be growing at 100% kind of rate because there also there will be competition. So that is the reason of the overall blend that we look at. We will look at a 10% growth in India by volume. The local areas being around maintaining market share would mean 5 to 6%. Newer territories would add more to that, and therefore will maintain 10%.
Got it. Thank you so much.
The next question comes from the line of Manish Jain with Gormal One LLP. Please go ahead.
Yeah, hi. Wanted to congratulate you on the great work that you all have done on direct procurement. In fact, that is getting hidden in the numbers that you have shared. So, especially the kind of market share gains that you all have done from leading competing dairy companies in the areas you are operating in. So, really keen to understand how you all are managing to create a very powerful procurement in your areas in India, and what is the share of direct farmer payment that you are doing?
Almost 100% that we do, sir. Maybe if there is some technical errors, it might be different, but otherwise it's very insignificant. Otherwise, it's all, we can consider it almost as 100% direct farmer payment that we do. And regarding what you said as the strength, I think it is more of the human talent that we have to develop in terms of the number of people involved, because it's unique in its nature. It's like marketing in the front end of how do you create a brand or an operation. It is similar in the back end. The team makes a lot of, to keep the team active, to keep the team more involved is where it goes. And I think in the days to come is also being ahead of the curve in terms of the new things that happen, right? For example, if you look at direct procurement payment, we or another companies were one of the earlier leaders who went in early and then were able to convert it to all the farmers. So I think every time when there is something new that comes, it is being aware and continuing to becoming better at that. I think qualitatively we've also taken a significant large number of measures of MBRT to be improved. It's more an internal drive rather than external pressure, and as long as that internal drive continues to be there and the team is well focused and stays well, it will continue to grow.
And the second question attached to this one is, have you seen decline in per animal productivity which other dairies have also seen?
So I think for us, per animal is a different data because we're not able to get significant data tracking animal-wise. It depends on regions, and certain areas the animal productivity increases, certain areas it might not. And I think we will in the days to come, it is there. But if you look at a farmer average, the farmer average has been increasing steadily. Over the past decade, it's moved up significantly per farmer production. Animal data is very difficult to pinpoint and project, but yes, we do hear some states that the per productivity of animal has gone up, and for certain things like initiatives we are taken when we are giving good quality feed, the farmers who are buying feed from, let's say, Dodla Dairy cattle feed are doing around 14 liters per farmer as an average, which a non-Dodla feed consumer is only able to do around 11 liters per farmer average. So I think these initiatives also help in terms of improving productivity.
Thank you. Ladies and gentlemen, we will take that as the last question for today. I would now like to hand the conference over to the management for the closing remarks.
Thank you everyone for joining us today on this earnings call. We appreciate your interest in Dodla Dairy. If you have any further queries, please contact SGA, our investor relation advisors. Thank you very much.
Thank you, sir.
Thank you all.
Thank you, sir. Ladies and gentlemen, on behalf of Dodla Dairy Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.